Greetings, and salutations to all you, my brothers and sisters of the trading world out there today. I hope your pursuit of retirement early is going well. I hope your portfolios are doing well. And I hope everything is just going right in your life. I hope you're having fun with it because that's really what life's all about. We're trying to have fun here and just enjoy the time we've been given. So, hey, I want to stop in today and talk a little bit with you and discuss a little bit about small cap stocks. And really small cap stocks, it depends on who you ask. You can get all kind of good and bad opinions about small cap stocks, but as small traders, small cap stocks are just kind of the way of life. If you get into trading and you just start going straight to Apple or straight to cat and all these different stocks, they're very expensive, and their put credit spreads are very expensive, and even the smallest, most defined risk trade is going to cost you money. And people are like, well, you can just get in there and do that, and yeah, you can, but what happens is if you're wrong, you really get stung. So it's a much better transition to start out with smaller stocks, the smaller cap stocks. And just because it's a small cap stock doesn't necessarily mean it's small money. Now, we're not talking about penny stocks here. Penny stocks are a whole different category. It's apples and oranges. They're completely measured by a different moniker. It's just a completely different thing. So small caps is what we're talking about. And if you want to see a great list of the small cap stocks, I suggest just look into IWM, look at all their holdings, and you're going to see stocks in there you never even heard of. You have no idea what they do. So if you really want to look into it, go into IWM, look at their top holdings, and look into the stocks that you see. If one looks interesting to you, look it up. What do they do? What's their history? What have they been into? So do these kind of due diligence background search for these. But small cap stocks are great for new traders, for small accounts. And I always say if you have a $10,000 account, you probably should be trading stocks that are, $10 to $20. And a $20,000 account, stocks that are $20 to $30, and so on and so forth. And, until you really get some good footing. You could put $50,000 in the market and start trading these Apple type stocks or, these high flyers and all these different things. But the problem is we don't have the experience to do so. And we really need to get some reps under our belt with some stocks that aren't just going to burn us to the ground whenever things go against us. Because we know that things are going to go against us sometimes. Sometimes we pick wrong. Sometimes the market just does weird stuff. So make sure that whenever you get into these, you know what you're getting into. You know the company a little bit, and you've looked at it for a little while. Don't just make reactions to something. Just don't react to something. Respond to something. I've responded to this because I've looked into it. There's a reason, there's a thesis, there's a plan, and there's a whole idea behind it. So get into those small caps, absolutely. Now, we've gotten into small caps. We've talked about some small caps here on us, with Archer and Joby and Serve and Sound. And there are great illustrations of small cap stocks. They run for a while. Their premium's good. You can get in and out of them on options. They're not maybe necessarily ever a buy and long-term hold, but they could be, but you'd have to have so much, luck in that it just wouldn't be worth it. But you get into those, you play around with them. They're here for a good time. They're not here for a long time. And just always remember that. Don't get married to these positions. Don't get into these so much to where, you're holding them and you're into them, because you're going to get put to stock. You're going to get, in situations when you're into these small cap stocks, because when they have pullbacks, their pullbacks are 40% greater, 50% greater than all the rest of the pullbacks that you see in the market. So just be warned that whenever you get into these stocks, you can really suffer huge pullbacks. You can get a signed stock that's now $2 or $3 underwater on an $8 stock. So it's very, very, very subject to change. I mean, you can get in these and get out. Yes, don't linger around in those small cap stocks. Now, we have got into some small cap stocks that have just been absolute disaster, but we made money off of them. So some of them were green scratches. We were playing around with BBAI at one time, and BBAI was such a promising stock. They had government contracts, they had all these things going for it, but at the end of the day, they stink now, and they still stink. They're down around $3, and yes, they've had a big uptick right now from 2. So who cares? So see how they fall out of favor. The trading of the options are wheeling them around. Then all of a sudden, boom, they're done. The show's over, and you got to hope that you're not too heavy into it. That's why we always say keep your size small, keep your position small. That way, if BBI sinks, you're only out one contract. You're not getting hemorrhaged on 20. So just make sure your sizing is appropriate. Rich Tech Robotics was another one. We traded Rich Tech Robotics all over the place, and it was fantastic premium, and it was such a promising stock. But then one thing after another, boom, 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 and Rich Tech goes down and never has got up off the ground. It's still trading under $2. It's a piece of garbage now. But Rich Tech Robotics at one time was a very promising stock. Could both those stocks come back and be a promising company? Absolutely, absolutely. But right now their stock is not. So we've done others. We've done others. Maybe you have heard of, or you were in the market at the time whenever the pot stocks got really hot. All the marijuana stocks ran like crazy, and they were just soaring like nuts, and everybody was all over them. Some of them were kind of even a meme stock, if you will. But what happened was, it all went to hell in a handbag. So now they're worthless. They're under $1. Everybody got smoked on those marijuana stocks. See what I did right there? So just understand, you can really get burned to the ground. One of the worst, no, not one of, the worst trade I ever have done is on one of these small cap stocks. And it was in the pharmaceutical, therapeutic world. And it was with Humacyte. And I really was like, oh my gosh, I think I'm onto something. I was new, but I tried to do what I was supposed to do. I got into it. I did my due diligence. I thought they were a good company. It's the only company I've seen get an FDA approval and their stock go down. It was a disaster. I lost thousands of dollars on it. I still have some of it in my portfolio to remind myself of what really silly moves can do, because I got into it, and then I'd heard about dollar cost averaging if the stock goes down, so I got into another put and then another put, and next thing you know, I've got 600 shares of this junk that cleared down on the bottom of the ocean. So just understand, it could go either way because we also started trading APLD, Applied. We started Applied about $5. We got put to shares about $5. Well, that thing has run clear to $50, and we tracked it all the way along. And we've had shares and sold shares, done a lot of puts in that thing, and it's just been a fantastic stock. And actually, full disclosure, I still am in a campaign of Applied puts that we're running, which will turn into a campaign maybe of the wheel strategy. But I've been running puts on it forever and haven't been assigned anything. I don't think I've been assigned any shares this year on all of the puts that I've ran. So, that works out very well. We can talk about Palantir. Palantir was a cheap stock. I was trading Palantir at $8 or $12, and now Palantir, you just forget about it. That thing's run all over the place. Say it to run to the moon is an understatement. It's a huge stock. It's a huge company. It just had double up after double up after double up, and we've had shares and once again run puts on that thing, and now, it's up around 170. So, you can have winners, you can have losers, but you're never going to know which one's which. You're not going to have the insight, and there's nobody knows what the market's going to do. I don't care what they tell you. Nobody knows what the market's going to do. So understand, just take it with a grain of salt. These people don't know, and you know just as much as they do, and if you don't, you will shortly, because you're watching these videos, you're studying, you're getting in there, you're making your portfolio tight, and you're going to know just as much as they do. I would venture to say you almost know as much right now as financial advisors would know about how you want to trade. So, you're doing a great job. Watch out for these small caps. Now, here is an interesting point about the small caps. Whenever there's a Fed meeting, and the Fed has a rate hike, which is a possibility for the next time. So whenever there's a rate hike, these small caps are very different. Some of the small caps just get crushed. They go down because they have such a huge amount of debt. They operate on a high level of debt, and whenever the rates go up, that's going to be a problem for them. However, traditionally, whenever we have a rate hike from the Fed, it is a good thing for small caps, because small caps benefit from it, because it means that business is going well. The economy is running very well. And when you have a rate hike, then it just is a reflection, and people get into small caps because they understand, hey, business is booming, everything's going well, let's get into some of this small cap kind of stuff. So it could go either way. Once again, whenever the Fed raises the rates, you're going to see companies that deal in materials, you're going to, localized banks, all these are going to have a little bit more trouble than other companies, because they depend once again so heavily on loans and the bank. Hey, there's a lot of really fun small cap stocks out there. I think I've traded Funco for, as you can see, I love the Funco, got the Batman on, but I love Funco, and I've traded Funco Company just to get a couple bucks back from them from all the stuff I bought from them over the years. And it's been an absolute great trade, and it goes against everything that some people would tell you. It doesn't have weekly options, and it's a small, small dollar stock. It's a foreign company, all these different things, but it's been fantastic for me. I absolutely love it. And stocks like ONDS that we talked about that are up and coming in the drone and warfare. We've talked about these stocks. They're great stocks. TMC is another great. It's a mining or metals company, and it's a great little stock. Right now, it's just under $5. But once that thing pops over $5, it's a great little trade. It's a great trade that I've been running all year long. I had great success with it. And we even look at if you hear about these generational companies like Corning and all these old companies that are really having a resurgence. Well, Nokia is one of them as well. Nokia, is a little different because they are such an old company that's so down so low. So it's highly speculative. But Nokia is down around $9. And if it has anything like these generational companies have had a run lately and get contract after contract after contract, well, Nokia could be right back in business. It could easily be a double up because these stocks are going to give you more of an upside quicker than a large cap stock. These mega cap stocks, yeah, they move, but a $10 move on a $500 stock is not exciting. But you can get $3 and $4 and $5 moves on these $10 stocks, which is a huge profit. But you can also give them a pullback just exactly the same way. So you got to be careful. We've done HIMS, we've done Lyft, we've done SoFi. So many of them when they were small, when they were $8. You could say I knew them back when they were little, and you can get into them, but just please do your due diligence. Please do your research on these. Small caps shouldn't be something that you stick around with and stay with. It's kind of like an entry-level position. Get into the small caps, trade them until you understand and have more money and build your, either have more money or more intelligence about what you're doing, and just then get in there and start raising your level. But you never want to get into more than 3, 4, 5% in one position or even sector. You want to just make sure you're not getting too heavy. Graduate out of the small caps. But hey, I love to trade them, so I always have a 5% or so allocation of my portfolio that I like to get in and out of these things. And one of these days the small caps no longer become small caps. So if you're on the run with them, then one of these days they just become a stock that you may want to have and to hold. They may be a stock that you always are trading in and out of. They may be part of your so-called core positions. So just get in there. Enjoy the small caps. Don't let anyone tell you that they're junk or anything, because most of those people are just ivory tower pricks that have a bunch of money and look down on people who have to trade $5 and $10 stocks, just to be honest about it. So hey, thanks for tuning in. Thanks for your time. I greatly appreciate it. I know how valuable time is. I hope everything goes well for you this week and in the days to come. We'll be back here talking soon about another awesome topic in the market. And hey, we'll see you on Trading in Your Future.